why I'm not a fan of tastytrade.com. David Jaffe with beststockstrategy.com. Go to beststockstrategy.com, enter in your email address, and receive over $400 worth of free trading materials. And those free training materials are worth more than almost everybody else's paid materials. So I know that I recently did a video about why I believe that Kirk Duplessis from Option Alpha doesn't really make any money, and most of his students, especially those who have account sizes of under like $20,000 or $30,000, I think that none of them are profitable, or an extremely small percentage. Tastytrade is a little bit different, all right? Like, I've spoken to both Tom and Tony, and I respect them tremendously. Tom is probably worth, I don't know, $200 million, which, you know, I respect that, and I'm really happy and proud for him because he's built up businesses. And he's probably around like 60 years of age, and he built up businesses when he was like in his 40s. So I have a lot of respect for him, and Tony as well. You know, when I emailed them, they emailed me back within like 24 hours. They're fantastic. The only thing is, and I definitely do not think that Tastytrade in any way is a scam. So for the people who are putting out information, besides myself, and obviously, you know, you guys are going to think that I'm like a little bit biased, but besides myself, there is only 1.5 other good resources for you. Tastytrade is that one, and the half is Option Alpha, where I think that the production value on his videos are pretty good. I think that his strategy is kind of like shitty. I don't think you're going to make any money because I don't think he makes any money. But Tastytrade is really good. They have incredible videos that you can learn. I definitely think that if you follow Tastytrade and you don't follow me, then you're 100% certainty you're not maximizing your gains, and you're also increasing the probability of losses. So I think that if you try to save money and not subscribe to the alerts or take my education course, I can almost guarantee you that you're going to end up costing yourself around 10 or 20 times as much money as those programs cost you. But I definitely think that, you know, if you watch my videos and you watch some of Tastytrade, then you have a really good understanding of the overall strategy. But remember, you have to make really good decisions. And my problems with Tastytrade are the following. One, you're taking way too much risk, primarily because they encourage people to trade small and trade often. My problem with that is it often leads to you having a lot of small positions on a numerous amount of underlyings, but all the underlyings aren't the same. So what Tom and Tony do and what they encourage is that they tell you to look for underlyings that have very high IV rank. So when you scan for IV rank, you're not necessarily discerning between a Tesla, which like 2 weeks ago was at 420, and then like a week later it was down to like 260, and then it jumped back up to 320, and now it's back to around 260 again. Or like, you know, or another stock, like all they're telling you to do is not make any discernment between the underlying that you trade, whether it's Snap or Twitter, etc. And all they care about is high implied volatility and maximizing the amount of premium that you receive. But I'm telling you with absolute certainty that you should care about the underlying that you're trading, right? There's a huge difference between Snap and Facebook, right? There's a reason why Snap is losing the number of people, or the average user per month, the amount of time that they spend on it, whereas Facebook with the Instagram platform is gaining users and gaining market share. If you're trading a Twitter, it's almost like trading, I wouldn't necessarily say it's like MySpace, but those aren't the best examples. But the point is, you should care about the underlyings that you're trading. And I can tell you on numerous occasions where I've listened to their podcast, where Tom has actually lost track of some of his underlyings. I know that you can say, well, yeah, like he's producing a show, he's producing hours of content, he's running a company. Okay, that's great, but for you care about maximizing your gains and making money. If you have a $10,000 account and you scan based upon IV and you're trading something like a Wynn Resorts, which is trading at like 180, I bet you that when Wynn was trading at 150, it had really high IV. So what would you do? You would then sell a 140 put, as Tastytrade would tell you, or a 145 put, or actually Tastytrade, they tell you to trade straddles. So you would sell a 150 put. Now, win is at like 123. What are you gonna do? Like, why would you even trade something like that when it's not a leading sector, it's not a market leader in its space? I mean, they just make no discernment, or they do not distinguish between market leaders and the quality of the underlying. And with your money, you should definitely care about only being involved in the most liquid, the largest, and the best underlyings. All right, I know that they definitely discern upon based upon liquidity, I get that, but they trade way too many underlyings, and there have been numerous occasions where Tom has even admitted on his show that he has lost track of his underlyings and he just simply wasn't paying attention to it. And the reason is because he trades way too many securities. He probably has positions on like 50 or 70 securities at a time. I don't care if his account size is 200 million, and I have positions on 5 or 6 securities at one time. He has positions on 70. The other thing is they're very biased towards having a negative delta. So a negative delta means that you would be short calls at all time. You would automatically hedge your position against the market falling very precipitously like it did in February of 2018. And I completely disagree with this strategy, because I definitely think that you are sacrificing around 20% of your gains every single year. And look, I get it, all right? The market is definitely going to correct, and even if I make an extra 20% a year for 10 years, and then we have a crash like happened in the Great Recession in 2008, if I end up losing 30% of my entire portfolio, but if I do end up losing 30% of my portfolio during that crash, then I would be much better off making an incremental 20% a year for 10 years than I would have by breaking even with that, by having that negative delta and not losing that 30% of my total account size. Because effectively, when you earn like 20% a year extra, you're effectively doubling your account size every single 3.5 years. So if at the end of 10 years I lose 30% on the total, my total principal and my total account size is so much larger, because I do not have that negative delta bias, which is acting as an anchor that is dragging and holding me back from maximizing my returns. So like I said, I definitely think that they have way too much risk, because they're telling you that you have to trade a lot more underlyings. They have short delta. The other thing is they encourage you to trade straddles and strangles. And I can't tell you how bad of an idea this is. Right now, one good thing about Tastytrade is they don't really encourage you to trade verticals, which I think is great, because verticals take away your premium. And Tom, I think he says that about 60 to 70% of his positions tend to be naked positions, which I agree with. I definitely don't believe that vertical credit spreads are the way to go. I think that encourages people to increase their size, it decreases the amount of premium, and it also takes away a lot of your flexibility, because you can't roll and manage that position. But at the same time, they do encourage you to trade straddles and strangles, and from my experience, the probability that the call side of those straddles and strangles get tested is about 2 or 3 times more than the put side. And also, when you trade a straddle, you are selling a at-the-money call, which you have a very high likelihood of that getting tested. And conveniently, they own Tastyworks, so they just say, hey, no problem, just roll up the untested side. But who has time for that? A lot of you guys are working full time, you're working on your side hustle. You don't want to sell an at-the-money straddle, and then even if you close it out for 25%, where you're only collecting 25% of the max of the total amount of premium, you don't want to have to make endless amount of adjustments and chase that security. I mean, Tom has numerous positions which are substantially underwater, and I can guarantee you that most of those are because he sold straddles, right? And most of those are because he's trading securities that at that moment had high implied volatility, and he was looking for a volatility contraction, and he just decided to make a trade and collect premium, and now he's paying the price for it. Do I think that Tom makes money in the stock market? 100%. Do I think that Kirk Duplessis from optionalpha.com makes money in the stock market? I'm not sure about that. But do I think that the Tastytrade strategy is the best strategy that people should have? I definitely do not believe that. And it's funny because I'll oftentimes get emails from people and they're like, oh, they'll talk about like theta and vega and high implied volatility. Like, I don't know if they're trying to impress me or I just don't get it. But the fact is that show me your returns. Like, I think that you're focusing on shit that is just completely not important, right? Like, the fact is that you should care about the amount of premium that you're receiving for doing a trade and for making good decisions. So the high IV and the days to expiration and all of that other extraneous information is factored into the price that you are receiving and the price that you're collecting and the amount of premium that you're collecting at that specific moment for making the trade, right? So you can look at high IV, you can look at everything else, you can factor everything else into the equation, but you don't even have to look at it because you simply have to make a decision when you make that trade and ask yourself, am I being compensated for the risk I'm taking? If I sell this put in Facebook with an expiration of 6 weeks out, do I feel comfortable receiving $2.50 worth of premium for selling that 145 put for the amount of risk that I'm taking? That's the only question that you should ask yourself. Not, oh, well, the implied volatility in Facebook right now is 70. And the implied volatility in Micron and Intel is 76. So even though I think that I would be better off by going with Facebook, you know, this has higher IV. So I'm going to trade this security. That's not the way that you should trade if you really want to make money, right? And you definitely shouldn't sell straddles, and you definitely, especially in a bull market, should not sell calls. I don't care if it's maximizing if it's going to maximize your capital efficiency, because those calls are going to end up getting tested and they're going to have to make adjustments, and you might actually have to end up increasing the number of puts that you have in order to increase the strike price of the call that you sold in order to make sure that that call does not become even more in the money. So if you really want to make money, you should follow Tastytrade. But if you want to maximize your profits, you should go to beststockstrategy.com and enter in your email and also become an alerts member. And you can also subscribe to our education course. It's the best education course available. It doesn't overwhelm you with extraneous information. It doesn't require you to log into your account and scan underlyings 4 or 5 times a day. It doesn't require you to do this bullshit where you're selling, like Kirk Duplessis from Option Alpha tells you, iron butterflies, and selling straddles that are spreads, and you have to log in and make like tons of adjustments. And the same thing with Tastytrade. They encourage you to make a ton of adjustments because when you're selling straddles, you will have to make adjustments, all right? And that's freaking annoying. That's gonna increase your commissions, which is great for Tastyworks, but you don't want to log into your account multiple times and incur that stress, because when you have a losing position, you think about it on the weekends. When you have a big losing position, it stops you from being able to get a good night's sleep. You do not want to get into the habit of selling premium only to have to make adjustments later on. Let me repeat that. You do not want to get in the habit of selling premium only to have an expectation that you will have to make an adjustment at a later date. It's not a good strategy. It's going to increase your stress and decrease your profitability. All right, let me just make sure that I hit everything that I wrote down. So too much risk, I definitely agree with that because they're encouraging you to sell straddles and strangles, and I do not like selling calls, although thankfully with Tastyworks and Tastytrade, they don't encourage you to sell on ETFs that much. They do encourage more so on specific underlyings, which is great, which is one of the big knocks that I have on Kirk from Option Alpha, where I think, all right, I'm not going to say it's a scam. I just think that he doesn't make any money and that people following Option Alpha don't make any money. He has short delta for Tastytrade, which decreases the returns by about 20% a year, which I definitely don't agree with. I think that you're way better off just trading the long side when you're in a bull market, and then if you want to switch to the short side, that's totally cool. By selling calls on Amazon. In February and March, I made a lot of money because I sold calls on Amazon. Why? Because the market shifted and the market was bear. I'm not trying to predict future price movements. If the market is bear, I'm gonna sell calls, no problem. But I don't wanna consistently sell calls and have that act as a drag against my returns. Too many underlyings. I've mentioned on numerous occasions that Tom himself has lost track of the underlyings, and that's led to some problems. And when you have a small account, you can't afford to take those losses. Another thing with Tastyworks is their exchange fees that they pass through to people are like 6 times higher than I pay with E-Trade. So I don't know what's going on. Like they tell you, hey, it's only like $10 a leg maximum, but then I think they also charge you like 20 cents per contract in exchange fees. I mean, to me, that's just crazy. Like I spend 10 cents per contract with E-Trade and my exchange fees, I think, are like 1 cent per contract. So even if I sold 100 contracts with Tastyworks, it would actually cost me a lot more, even though it capped it at $10. I would pay an incremental $20 in exchange fees, whereas with E-Trade, I would actually pay a lot less. I'd end up paying around, so let's say if I sold if I sold 100 contracts with Tastyworks, that would be $10 plus like $20 in exchange fees. That's like $30. And with E-Trade, I spend around $8.50 on a base, and then 10 cents in per incremental contract with 1 cent per exchange fee. So right there, you're looking at $18.50 plus an incremental $1 for for the exchange fee. So that's a difference of like $30 for Tastyworks and $19.50 for E-Trade. So even though they tell you that they're a really low-cost broker, they nail you with the exchange fees, and they're just way more expensive than what I pay with E-Trade. The other thing is they encourage you to make way too many adjustments. Their commissions, like I said, when you factor in the exchange fees, are way too much. And also, as I said, Tom has lost track of positions, which I believe is a little bit negligent. But I do want to tell you that I highly recommend that you follow Tastytrade and Tastyworks. A lot of my students use Tastyworks, and I'm not really a fan of it because I think that the visual UI UX and the visual interface is like very annoying. It's extremely slow for me to enter in trades. But a lot of my students, they use Tastytrade and Tastyworks, and I 100 times think that it's better than Robinhood, right? Like it's not even a comparison, right? I definitely think that Tastyworks is infinitely better than Robinhood. So I highly recommend Tastyworks as a platform if you have anywhere from like $5,000 or $10,000, and I can link you to the blog post that I made about how to choose the best online brokerage. But those are the problems that I have with Tastytrade and Tastyworks, and I definitely think that you're costing yourself money by just watching these videos and watching Tastytrade videos or listening to Tastytrade and not being an alerts member and an alert subscriber or purchasing the education course. And hey, look, I don't want to spend $599 for education either. I'd rather get everything for free. I don't want to follow someone and pay them $349. I can do it myself. Hey, if you want to think like that, if you think that you're a better trader than me and you make better decisions, then God bless you and more power to you. But substantially hampering and hindering your returns by not being an alerts subscriber because you are trying to be penny wise and pound foolish. You're sacrificing and not maximizing your returns, and you're also increasing your risk because you're trading in ways that are not the best strategy in order to maximize your profits. David Jaffe from beststockstrategy.com. You can go to beststockstrategy.com, enter in your email, and receive over $400 worth of free trading materials. Please like, share, comment, and subscribe to this video. Like I said, I'm a big fan of Tom and Tony. I definitely believe that Tastytrade is comparable to myself. My main point is that I don't believe that the Tastytrade methodology and Tastytrade strategy is in your best interest if you want to maximize your profits and minimize your mistakes. And I definitely think if you want to maximize your returns and minimize your mistakes, then you should sign up and become a member of beststockstrategy.com. Thank you for watching, and if you have any questions, let me know.